Good afternoon, everybody. This is Mark, and we're back here for a Friday, the daily recap for T3. So today was the day. We had the jobless numbers going into today. There was definitely nervous action, a little bit of an ascending channel on the spiders. It could have gone either way. It obviously chose to the downside. So we were a gap down regardless at the open. Obviously, then with the jobless number that was supposed to be at 150. Came out at 60,000 unemployment, worse also. So right now, we're at that point where they are throwing a lot of bad news at this tape. Obviously, the world markets, European, still in turmoil. This weekend's going to be a big weekend. Is there going to be any satisfaction that's going to be reached from an investor point of view? I don't know, but you gotta recognize what the technicals are showing you. And right now, we did break the 200-day moving average on the spiders. I believe we broke it on the IWMs, the Russell, and the Qs. It looks like we didn't quite break it yet on the Qs, which is 59.77. So that being said, we're not quite in oversold territory, even though it feels like things have gotten demolished in the last few days. We're getting to the point of technically there's a lot of damage done, and I don't think you're going to get that V bottom that everybody's looking for. It's not time of the year, but if we have a nice gap down on Monday, I think it's going to create a very nice buying opportunity. And I think from an investor point of view, this is where you start making your watch list. The CMGs of the world, the price lines of the world, whether it's like biotechs, REGNs of the world, whether you like Intel. This is where you start making your watch list on the best in breed, and you're finding opportunities. Everybody wanted to buy when we were up 10-12% for the year. Well, we're now unched for the year, and maybe even down a little bit, right on the flat line. Which again, this is where the indices come into play. You look at the spiders, you look at the IWMs, you look at the Qs, because as an investment vehicle, let's pull up the Qs right now. It broke all support. It broke below the 200-day moving average. But the one thing I will mention is this is the first time it's touched the 200-day moving average in months. First time, just like the rules of thumb we put in place. First time it touches the 50-day, normally bounces at some point off that, off that key moving average. 200-day is a key moving average. Every fund, every institution, every technical trader, every fundamental trader is looking at it. We broke below it. Let's see what happens tomorrow. I do think we can actually recover above it for at least a temporary period of time for a little bit of an oversold bounce. We'll have to wait and see what Monday brings. Ideally, I would like to see a big gap down on Monday to create very nice buying opportunities. We'll see if the market plays it out accordingly. Some key stocks we've been watching. We've been talking about the financials, and all I'm seeing is it's holding its 8-day moving average to the downside. Goldman Sachs worked its way to the downside. It looks like 90 is some support, at least temporarily. FAS is an ETF. Really has not shown, any goodness, and it's right at levels where it could waterfall back to like 65 at some point in time. So we'll have to wait and see where this market holds up. And JP Morgan, obviously, since that bank news and the losses, has basically just lost probably around 25 to 28% on market value, and it's now at 31 and change. And 30, I think, is the line in the sand that probably will become viable at some point in time. There's nothing, no need to step your feet, put your toes in quite yet. Monday and next week is going to create some good opportunities for us from a trading perspective, certainly. So you have to watch the VTF. But if you're an investor also, I think this is the time to start putting in, smaller, the tier system into place. And that's key to obviously investing. You're not going to be able to time it perfectly, but you want to dip your feet after 10 to 12%, pullbacks in the S&Ps. That's where you want to start, at least dipping your feet to at least have some involvement in the tape. So, stock-wise, Apple, we talk about it just about every day. It's significant. Had market leadership. Today was the day it was down $15, $16, about 2.5%. It was showing some weakness early on. You could just tell it was hanging up there, but there was really no life in it. Gap down around $9. Still intact. I don't think it's really, I put the line in the sand around 555, 560. I think it's just got a little back and filling to creating that will create a nice bull flag that eventually will go higher. But obviously today, if you were short, you got paid. I don't think it's a stock it's not my go-to stock to short. Certainly, it's one of the best. It is probably the best in breed, and overall, that's important to know, but it's still just a little back and forth action. Look at 555 as another buying opportunity. Minimum, take long-term calls out there if you believe in the stock at all. Other stocks that really have taken a nice beating, and I was involved with today, which wasn't any fun from my point of view, but Priceline looks like around 600, should be some support. It's the 200-day moving average. It would be the gap fill from back in March is around 597. So looking at this area at 610, it's in a spot where technically it doesn't look great, but it's also in a spot where I look at best in breed. At some point you might have an opportunity that might be a buyable opportunity. Certainly if it gap down on Monday, it will be buyable. I am personally long still, but obviously I've reduced the position and it's pretty light at this point in time. Oils and some of the commodity stocks showed some strength today. We'll talk oil. Schlumberger, they had a little bit of strength. You can just see it. I'll pull up a smaller time frame so you can see what I'm talking about, but could not really hold on to any bids. So we'll have to wait and see. They've obviously had 3 or 4 days of down action. The two commodities, obviously gold and silver. I talked about it once the news came out on the employment. I said gold looks good. It was already, I think I already chased at $1.20. Pre-market, so that was around 150, I want to say 152, 153-ish. Gapped, opened the day at around 155, and it closed 158. Here's the daily chart so we can see it. It's now, could get back to 160, 162. It's basically back in a swing long territory. We know how that's been. It's been very tough from a trading perspective, and it normally happens. All the main moves happen overnight. Keep it in perspective. But gold and silver, obviously, for protection, people are searching that out at this point in time. We're at an interesting level in this tape. Again, it almost feels like reminiscent of last summer, and we know how that has played out. The VIX, has spiked to 26, not nearly to where it was a year ago, which was at 40 and 45. I don't know if it's going to get to that level, but if there's no resolution across the board, if the Fed doesn't step in, if all these indicators that really have been working themselves up come into play, we could have a very volatile summer, just like last summer, which doesn't necessarily make for easy trading, but at minimum, there's going to be movement. We'll have to wait and see. I don't think we're in the same spot. But again, from a fundamental standpoint, you got to talk to those guys to see what is happening. Technically, we need a lot of time, and a bounce can happen. I don't think a bounce will last. You need lots of digestion and lots of back and filling across the board, starting with the banks. Obviously, we had a little bit of movement in gold, race to some security, and but high beta. Some of the stocks that we go to and the leadership, it's lacking right now. With that being the case, you got to go from a stock-by-stock basis. Do your chart work. Retail, which was a darling in the first part of the first quarter, has not really shown a whole lot of strength. You can start it with Lulu had 1 or 2 days up, and again, I'll draw that channel. It broke a 2-week channel. And now looks like 65 is some support, at least temporarily. And even same as Nikes and Under Armours, they almost, they look great on the chart, but right now I don't think the bears are afraid that new highs are going to be taken out with any sort of authority to cover. So looking for new highs, if stocks are at near new highs, they probably will be a little bit of resistance. The rules of thumb, guys, like we've been playing, 3 or 4 days down, still looking at it as an opportunity to be buyable. 3 or 4 days up as an opportunity to be sellable. We saw that across the board in some of the clouds this week. CRM, into earnings, gapped up $15. Then all of a sudden, a week later, a week and a half later, started selling off. New ranges, and it's back down to below where it was before earnings. So it looks like more selling is in the cards for the clouds. But again, a bounce could happen. It's just a matter of what the market conditions are going to show and what happens in the news over the weekend and going into next week. So technically, lots of damage. We're below the 200-day moving average. That's going to become significant. We obviously closed below that. The key is, do we have a washout on Monday, and then we try to retrace back to that level? We'll have to wait and see. The action will sort of dictate, and the headline news across this weekend will be the tell. At least for Monday, and we'll go from there. I think every day is going to be its own individual play, and we're in for some volatility, and it's here to stay. Hopefully everybody did okay today, or at least stayed out of trouble. We've been talking about that this downside action is going to happen, and I personally have not been in swings at all, probably for a better half of 3 to 4 weeks, and it just hasn't shown us. So I've been renting the long side and renting the short side for no more than a day, day and a half on both directions, and really just staying flexible. And I think that's the way to be, knowing selling may go away. That's coming to fruition. Again for the 3rd year in a row, so we'll have to wait and see. Have a good weekend, everybody. See you back on Monday.